Welcome to Griffonomics.
It is good to be back.
Today is Thursday, February 5th, 2026. And if you've looked at a financial ticker, a tech blog, or honestly just looked up at the sky in the last 24 hours, you know exactly what we're talking about today.
Oh, absolutely. The news has, it's completely shaken the bedrock of both the financial and the aerospace worlds.
It really has. We are looking at a fundamental pivot in what was arguably already the most important private company in the world.
I don't think that's an exaggeration, not at all.
Exactly. For years, we've known SpaceX as the rocket company. Maybe the internet satellite company if you live out in a rural area.
Right, the Starlink company.
But as of this week, they're attempting a pivot into something that sounds like it was ripped straight out of a sci-fi novel. They're calling it an innovation engine, but that feels like a bit of corporate speak for something much, much bigger.
It's definitely PR-friendly language, but beneath it, the ambition is almost hard to comprehend. And it's all centered around this mid-year IPO they're targeting.
And the numbers are just staggering.
They are. The headline number that everyone is scrambling to wrap their heads around is the valuation. We're talking about $1.5 trillion.
1.5 trillion.
Trillion, with a T.
Okay, let's just pause on that for a second. Because just a few months ago, in late 2025, we were looking at secondary sales that value the company at around $800 billion.
And that was already massive. $800 billion was already bigger than Boeing and Lockheed Martin combined. It was a giant.
But this is nearly doubling the value in a matter of months. How does that even happen?
It's an unprecedented leap. You usually only see that kind of multiple expansion in like a seed stage startup, not a mature industrial giant. And it's driven almost entirely by this merger news.
Which is our mission for this deep dive, right? We need to really unpack that. We need to understand how a rocket company merging with an AI company, specifically xAI, to build something Musk is calling a sentient sun.
A sentient sun, yes.
How does that result in a nearly $1 trillion jump in valuation?
Come on. That is the most Elon thing I have ever heard.
It is poetic, certainly, but there's supposedly hard engineering behind it, and definitely hard finance. They are targeting a $50 billion capital raise in this IPO.
$50 billion, which would be the largest in history, by a lot.
So our job today is to figure out, is this a genius evolution of the company, a necessary next step? Or is this a financial house of cards, a desperate move to fund a cash-burning AI project?
And we've got the documents to dig into it. We have a stack of Leap financial results, investor presentations from just a few days ago, and some insider reports that, they paint a pretty complex picture.
Okay, let's do it. It's complex, but the logic, I guess, has to be in there somewhere. To understand where they're going, though, we have to start with where they are right now. We need to look at the foundation.
I agree completely. Before the sentient sun, you have to understand the ground it's built on.
Right, so let's start with section 1, the business model. Before we get to the AI and the trillion-dollar mergers, what is paying the bills at SpaceX today? Because it is not just one thing anymore.
No, it's effectively a conglomerate already. You can really think of it as three main pillars holding the whole thing up. First, and most famously, you have launch services.
The rocket part.
The rocket part. This is the utility. This is the part of the business that has become almost boringly reliable.
Boringly reliable is the highest compliment you can pay in the rocket business. Usually, excitement in rockets means a RUD, a rapid unscheduled disassembly.
Exactly. It's the ultimate compliment. You look at the Falcon 9. It is the workhorse of the entire global space economy. By late 2023, they were launching this thing every 4 days.
Every 4 days.
And the landing success rate for the boosters, 100%.
That's still wild to me. I remember when watching a booster land was appointment television. You'd hold your breath, everyone would be crowded around a screen. Now it's just routine.
It's like watching a plane land at JFK. If you aren't a space nerd, you probably don't even know it happened. And that routine is where the margin comes from. Reusability is the key. They aren't throwing the most expensive part of the rocket away every single time.
They turned the rocket into an airplane.
In a sense, yes. But the Falcon 9, as incredible as it is just the cash flow generator for the launch side. The real disruption, the thing that makes this whole IPO thesis possible, is Starship.
Starship, the big shiny silver silo that we see blowing up in Texas every few months.
Well, less and less these days. But yes, that one. It's so much more than just a big rocket. It is a fully reusable, super heavy lift vehicle. The entire thing is designed to be reused.
So it's not just about getting bigger satellites up.
No, it's about fundamentally changing the economics of mass to orbit. It's the infrastructure for Mars. Yes, that's the grand vision. But more importantly for this discussion, it is the infrastructure for massive satellite constellations.
I've heard you use an analogy for this before.
Right. Think of Falcon 9 as a cargo van. It's reliable, it gets the job done, it's very efficient. Starship is a fleet of container ships. The scale of what you can move is just on a completely different level.
Which leads us perfectly to the second pillar, and honestly, the one that seems to be printing the most money right now. Starlink.
Starlink is the cash cow. There is no other way to put it. If you look at the revenue mix in these new documents, it has shifted dramatically over the last 3 years. Launch is prestigious, but Starlink is the engine.
What percentage are we talking about?
The documents suggest it accounts for somewhere between 50 and 80% of their total revenue now.
80%. That's huge. I didn't realize it was that dominant.
It is massive. The scale is just difficult to comprehend. We're looking at projections of over 9 million customers by late 2025.
9 million people paying, what, $100 a month, more or less?
The average varies, but
Yeah.
yes, that's 9 million recurring monthly subscriptions, and they're operating in over 155 countries. It's a global utility.
And the hardware is getting better.
Right.
I saw something in the notes about V3 satellites. What's the significance there?
Right. The V3 or version 3 satellites are a game changer. They have 10 times the data capacity of the previous generation.
10 times.
10 times. So they aren't just adding more users in new countries, they're dramatically improving the service for existing users. It helps solve the density problem, the issue of too many users in one area, like a city.
So it can actually compete with terrestrial broadband in more populated areas now.
That's the goal. And then you have the real market expander, the direct-to-cell rollout.
This is the part that blows my mind. This is where they partner with T-Mobile and other telcos around the world to connect regular smartphones, the phone in my pocket right now, directly to a satellite.
Exactly. No special dish needed, no terminal, your existing phone.
So what does that do to their market?
It expands their total addressable market, or TAM, from people who live in rural areas with no fiber to literally anyone with a smartphone who steps out of cell range.
Which is everyone.
It's everyone. It turns them into a global telecom competitor overnight. It's a strategy to eliminate the very concept of a dead zone.
So they have the rockets, they have the internet. What's the third pillar you mentioned?
Starshield. This is the defense layer.
Sounds ominous, like something out of a Marvel movie. SHIELD versus Starshield.
It's pragmatic, really. It is a military-grade variation of Starlink designed for secure government communications and, importantly, Earth observation.
And this isn't just a proposal, right? This is active.
Very active. It proved its immense value during the Ukraine conflict. The Pentagon saw that in real time. Now it's a standalone line of business with the U.S. military and other allied governments.
And that's got to be sticky revenue, I'd imagine.
Extremely sticky. Once the military builds your network into their core command and control operations, they don't switch providers easily. It becomes critical infrastructure.
Okay, so that's the foundation. A dominant, almost utility-like launch business, a massive cash-printing global internet business, and a secure, growing defense business. That sounds like a perfectly good, maybe even great company on its own.
It would be one of the most successful companies of the century, even if they stopped right there.
So why the pivot? Why this massive news on February 2nd about acquiring xAI? Why mess with a formula that's clearly working?
That is the multi-trillion-dollar question, isn't it? And this brings us right to Section 2, the strategic inflection point. This is the moment everything changes.
Okay, let's unpack the deal itself first. SpaceX acquired xAI. What are the numbers we're looking at?
The combined entity is targeting that $1.25 to $1.5 trillion valuation we mentioned. Within that deal, xAI itself is being valued at roughly $250 billion.
$250 billion. For a company that, let's be honest, has a chatbot called Grok. That seems steep.
It seems astronomically steep. OpenAI took a decade to get to a valuation half of that. xAI has been around for, 2 years?
Right. So what justifies that price tag? Is it just Musk's name?
If you look at it as just a chatbot, it's incredibly steep, maybe even indefensible. But the deal structure is interesting. It's not a cash deal. xAI shareholders are receiving SpaceX stock.
Stock swap.
Exactly. The ratio is about 0.1433 SpaceX shares for every one xAI share, so it's a stock swap. It locks the investors from both sides into the same boat. They're all betting on the combined company now.
But the rationale, I still have to ask.
Yeah.
Why does a rocket company need an AI company? Is this just Musk wanting all his toys in one big corporate box?
You know, there's certainly an element of consolidation of wanting his major projects under a more unified structure, but if you read the internal memos and the filings, the public argument is all about infrastructure.
Infrastructure.
Yes, Musk is arguing that you cannot separate the future of space from the future of AI. He's not buying a product. He's buying a capability. He calls it an innovation engine.
An innovation engine. Such a vague term.
It is, but think about it this way. We are hitting a physical wall on Earth when it comes to power for AI. We'll get into that a lot more in a bit. But the core rationale is that xAI provides the intelligence, the software brain, that SpaceX needs to optimize its massive hardware constellation.
And SpaceX provides what for xAI?
It provides the physical infrastructure, the power, the cooling, and the orbital slot that xAI needs to grow beyond the constraints of the terrestrial power grid.
Okay, holding that thought on the Powerwall, that feels like a huge piece of this. But let's talk about the IPO mechanism itself. They're planning this for June 2026.
June 2026, and as we said, they are targeting a $50 billion capital raise.
Which is just, I mean, for context, what's the biggest IPO to date?
Saudi Aramco, that was $29 billion. And before that, Alibaba was $25 billion.
So SpaceX wants to nearly double the Saudi Aramco record.
Yeah. It's audacious. They are planning to suck a massive amount of liquidity out of the public markets. But they argue they need the cash. And here's a detail from the filing that I found absolutely fascinating and just very characteristic of Musk, the timing.
The dates, I saw this. It's not based on, like, the end of a fiscal quarter.
No. The proposal in the documents aligns the IPO with a rare planetary conjunction of Jupiter and Venus on June 8th or 9th.
You're kidding me.
I am not. And the alternative date listed, the backup plan.
Let me guess. His birthday.
June 28th, Musk's birthday.
Of course. Because why would you base your IPO date on market conditions when you can base it on planetary alignment?
It adds to the mystique, doesn't it? Which you could argue helps drive the retail investor demand. But functionally, beyond the theatrics, they need that $50 billion. The burn rate for xAI alone is estimated at $1 billion a month.
$1 billion a month? What are they spending it on?
Compute. AI is incredibly expensive. Training these next-generation models requires massive compute clusters. Tens of thousands of NVIDIA's latest chips, the H100s or the new B200s. And those chips need power and cooling. It's an astronomical cost.
And developing Starship isn't cheap either, I imagine.
Not at all. So this IPO isn't just an exit for early investors, which is what many IPOs are. This is a war chest. It's primary funding to build out this merged vision.
So they're burning cash to build this future.
Yeah.
But let's look at the financial reality of the company as it stands today. Let's move to Section 3, financial realities. Because for a company that's about to have such a massive cash burn, this valuation surge is just wild.
It is. It's what the market is calling the private to public leap. We saw those secondary sales in late 2025 at an $800 billion valuation. Now they want the public markets to give them $1.5 trillion. That is a massive premium.
How does that compare to others in the industry? You know, a company like Rocket Lab, for instance.
There's no comparison. It's not even in the same league. If you look at the multiples, the price to sales, the price to earnings, investors are being asked to pay a premium that implies SpaceX isn't just an aerospace company. It implies it's a technology monopoly in the making.
But here's the things the documents revealed. The thing that makes it so different from a typical cash burn tech IPO like, say, Uber or WeWork back in the day.
This is the real surprise in the filings, isn't it?
SpaceX is profitable.
Very profitable.
Wait, really?
Huh.
With all those rockets blowing up during testing and the constant satellite launches, they're actually in the black.
Yes. The leaked financials show that in 2025, their revenue hit somewhere between $15 and $16 billion.
Okay, that's a big top line.
It is. And for 2026, they are projecting a surge to $23.8 billion.
Wow. That's over 50% year-over-year growth at that scale. That's incredible.
It is. But the kicker, the number that really made Wall Street's eyes pop, is the EBITDA.
Earnings before interest, taxes, depreciation, amortization. Basically a measure of cash flow and profitability.
Exactly. They generated an estimated $8 billion in EBITDA in 2025.
$8 billion. That is absolutely stunning. Most big tech IPOs are bleeding money, sometimes for years after they go public.
Precisely. And this is where that big bet on Starlink truly paid off. Starlink has turned into a recurring revenue machine with incredibly high margins. Once the satellite is up there, the cost to service an additional customer is relatively low, but that subscription money keeps coming in every single month.
That's a classic subscription software model, but for global infrastructure.
And that profit engine, that $8 billion in cash flow, is what has been funding the R&D heavy side of the business, like Starship development.
So Starlink pays for the rockets. And now the plan is for the rockets to pay for the AI.
That's the thesis. And that brings us to the really mind-bending part of this whole plan. Section 4, the orbital compute thesis. This is the sci-fi turn I mentioned earlier.
This is the sentient sun. Okay, help me understand this. Why on earth do we need to put data centers in space? We have perfectly good, massive data centers in Virginia and Oregon and all over the world.
Do we? That's the fundamental question Musk is posing. The problem on Earth, the bottleneck, is power.
Electricity.
Yes, we are seeing it already. Utility companies are telling data center operators, Amazon, Google, Microsoft, that they cannot hook up new facilities to the grid for years because there just isn't enough electricity being generated. AI training for a single large model can require gigawatts of power.
And the grid is already creaking under the strain of, air conditioning and electric cars.
Right. So Musk's proposed solution, orbital data centers.
Okay. And the plan is to launch up to 1 million satellites.
1 million.
Just to put that in perspective, how many active satellites are in orbit right now from all countries and companies combined?
It's around 9,000, maybe 10,000.
So he's talking about a 100-fold increase.
Yeah.
Just for his company.
It's an order of magnitude shift that's hard to even visualize. And these aren't just the simple relay satellites that Starlink uses now. The filings describe them as being equipped with GPUs. They are flying servers.
Okay, but again, why space? Is it just to get away from regulations? Or is there a physical advantage?
There is a massive physical advantage. It's what the internal documents called the energy arbitrage.
Energy arbitrage, explain that.
If you place a satellite in what's called a sun-synchronous orbit, it can stay in direct sunlight 24 hours a day, 7 days a week.
It never passes into the Earth's shadow.
Exactly. There is no night. There are no clouds. The solar intensity is significantly higher than on Earth because there's no atmosphere filtering it out.
And because there's no night, you don't need batteries.
You don't need massive, heavy, expensive battery banks to store power for when the sun goes down. The power source is constant.
So you have unlimited, clean, constant nuclear power from the sun being fed directly into the GPU to train an AI model.
Exactly. It's an attempt to create a Type 2 civilization capability, harnessing the energy of a star directly. Musk has claimed in these investor meetings that within 2 to 3 years, space will be the lowest cost place to put AI.
That is the aha moment for me. I always thought of Starlink as just internet, so I can watch Netflix in a cabin in the woods. But this isn't about internet access.
Not anymore. That's just phase 1.
It's about moving the brain of the internet off-planet to avoid crashing the U.S. power grid.
Correct. It is fundamentally about sovereignty over compute. If you rely on the U.S. power grid, you are constrained by regulation, by the price of natural gas, by aging transmission lines. If you are in orbit, your only constraint is how many starships you can launch.
And since they own the starships,
They control the only bottleneck. They own the launch. They own the satellites. They own the AI. It's complete vertical integration.
But surely the U.S. government has something to say about this. I mean, a single private company building a literal sentient sun above our heads. That leads us right into Section 5, the defense and NASA symbiosis.
The relationship here is fascinating, and you have to look at the history. It's a savior relationship, really. What do you mean by that? Well, you have to remember, back in 2008, after the third Falcon 1 failure, SpaceX was literally days away from bankruptcy. Musk had put his last dollar in. They were done.
I remember reading about that. He was basically broke.
And NASA saved them. They awarded SpaceX a $1.6 billion commercial resupply services contract to fly cargo to the space station. That contract saved the company.
And now the tables have turned a bit.
Completely. Now, SpaceX is essential to NASA. They hold the $2.9 billion human landing system contract for the Artemis moon missions. NASA literally cannot get American astronauts back to the moon without Starship.
So NASA needs SpaceX as much, or maybe more, then SpaceX needs NASA now.
That's a fair assessment. But it's not just NASA anymore. The really deep integration is happening with the Pentagon.
Right, the arsenal of freedom concept from the documents. What does that mean in practice?
It means SpaceX is pivoting from being just a vendor, someone who sells services like a launch, to a prime contractor, a core strategic partner. The Pentagon is actively integrating Grok the AI from xAI into military defense networks.
Wait, the chatbot. The AI model is being integrated into defense networks.
It's the underlying large language and reasoning model, yes. There's a $200 million initial contract mentioned in the reports.
What are they using it for?
For rapid intelligence analysis, for automated target tracking, for battlefield decision-making, all using the data streams from those Starship satellites we talked about earlier.
So you have Starship satellites watching the ground, feeding that real-time data to a Grok AI model orbiting overhead, which then analyzes it and sends actionable intelligence directly to commanders at the Pentagon.
In near real time, yes. The implication is profound. The U.S. government is now becoming heavily dependent on this specific private ecosystem for its national security. It's not just we buy rockets from them. It's our eyes and our brains in the sky rely on their infrastructure.
That makes them too big to fail on a whole new level.
Yeah.
It's one thing to be a crucial launch provider. It's another thing to be a core part of the military's central nervous system.
It's a level of integration we haven't seen with a private company, perhaps ever.
But surely there are risks here. You can't just launch 1 million satellites and build a space brain and expect everything to go perfectly. Let's get to Section 6, critical risks. This is where the physics has to meet the finance.
And this is where we have to put our skeptical hats on, because the risks are not trivial. The first one is financial. Let's call it the bailout theory.
This is the cynical take on the whole merger.
It is. The skeptic would look at this deal and say, xAI is late to the AI party. OpenAI and Google are way ahead in terms of model development and market penetration. xAI is burning $1 billion a month buying thousands of NVIDIA chips just to catch up.
And SpaceX, meanwhile, has that $8 billion a year in cash flow from Starlink.
Exactly. So the cynical question is this merger just a clever way to use Starlink's piggy bank to pay for xAI's chip addiction? Is it financial engineering?
Using the high valuation and real cash flow of SpaceX to absorb a money pit of an AI company.
It is a valid concern. If the AI doesn't deliver on this sentient sun promise, you've just massively diluted the value of the incredibly successful rocket and internet company with a speculative AI venture.
But you said the bigger risk, in your opinion, isn't financial.
No, I think it's thermodynamic.
Thermodynamics, you mean the laws of physics.
The fundamental laws of heat and energy. Computers get hot. Anyone who has a gaming PC or a powerful laptop knows this. Now, imagine a data center with tens of thousands of GPUs. It produces an immense amount of waste heat.
And on Earth, we use massive air conditioning units and increasingly water cooling to get rid of that heat.
We use air and water. In space, you are in a vacuum.
And a vacuum is a thermos. It's a perfect insulator. It keeps hot things hot.
Precisely. There is no air to blow over a heat sink with a fan. You can't use convection. Heat dissipation in a vacuum is an engineering nightmare. You have to radiate the heat away as infrared radiation, which requires massive radiator panels.
So the whole orbital compute thesis dies if they can't solve the cooling problem, if the chips just melt.
Correct. The viability of this entire $1.5 trillion valuation hinges on solving a thermodynamic hurdle that no one has ever solved at this scale in orbit. It's a massive, massive engineering risk.
And then there's the environmental risk, the debris problem. 1 million satellites.
It's the Kessler Syndrome problem, scaled up by a factor of 100.
Explain that for people who haven't seen the movie Gravity.
The Kessler Syndrome is a theoretical scenario where the density of objects in low Earth orbit, or LEO, becomes so high that collisions between objects cause a cascade. One collision creates debris. That debris then hits other satellites, creating even more debris.
A chain reaction.
A chain reaction that could, in theory, render low Earth orbit unusable for centuries. A wall of high-velocity shrapnel that would destroy anything anyone tries to launch.
And with 1 million new satellites, the probability of that first collision goes way up.
Way up. And there are other environmental concerns, too. When these satellites eventually deorbit and burn up in the atmosphere, they release aluminum oxide into the upper stratosphere. We don't fully understand the long-term climate impact of that yet.
So we are risking the usability of orbit and potentially the climate for this AI dream. That's High stakes.
Extremely high stakes. The risks are as astronomical as the valuation.
But if they pull it off,
Yeah.
if they solve the heat problem and manage the debris, that brings us to Section 7, the X conglomerate ecosystem.
Because this doesn't stop at just rockets and AI, does it?
No. This is about vertical integration on a scale we haven't seen since maybe the days of Standard Oil or even the East India Company.
Yeah.
They're creating the everything company.
The merger brings AI, rockets, internet, and mobile communications all under one roof. And the corporate structure in the documents reflects that, right? Yes, the filings show Space Exploration Technologies Corp. is listed as the managing member of xAI Holdings. It's a formal integration. But you have to look at the other synergies, the ones that aren't even in this deal. You have the robot labor layer.
This is Optimus, the humanoid robot from Tesla.
Right. Optimus needs a brain. Grok, the AI from xAI, provides the brain. Optimus needs to work somewhere. Maybe it works in the Starship factory, assembling rockets. Maybe it works on Mars, building propellant plants.
Or maybe it's sent into orbit to maintain those orbital servers.
Potentially. If you can have robots repairing and upgrading satellites in orbit, the economics of the whole system change yet again. It's a self-sustaining system. And this is why analysts are now openly speculating that this is all a precursor to a massive unified holding company.
The grand merger of Tesla, SpaceX, and xAI.
A single entity valued at over $2.6 trillion today, and likely much more if this all works. One single company that controls energy through Tesla, transport through Tesla and SpaceX, and now intelligence through xAI.
That is a terrifying and exhilarating thought at the same time.
It is a Type 2 civilization starter kit, all under one corporate umbrella.
Okay, so we have the complete picture. It's February 2026. The IPO is slated for June. The valuation is eye-watering. The potential is civilization-altering. And the risks are physical, financial, and existential. So let's get to our final section, Section 8, the final verdict. Is this a buy?
It is, without a doubt, a high-risk frontier buy.
Let's break that down. What's the strategic outlook? What are you actually betting on if you buy into this IPO?
You are not betting on their current cash flow, even though that cash flow is excellent. Investing in this IPO is a singular bet on one thing: Elon Musk's ability to force a paradigm shift through sheer will and engineering. It is a bet that he can bend reality again, just like he did with reusable rockets and electric cars.
But the dependencies are huge.
They're binary. Success hinges on two completely unproven things. First, Starship must achieve full and rapid reusability. It has to fly like an airliner, reliably and cheaply, to launch the sheer weight of 1 million servers into orbit.
And second,
the physical viability of space-based AI. Can they solve that heat problem? If they can't, the entire sentient sun thesis collapses.
and the valuation check. Is it just too expensive, even if you believe in the vision?
It is expensive. The price-to-sales ratio, based on the 2026 projections, is roughly 100 times, even for a high-growth tech company. That is nosebleed territory. You are paying for absolute perfection in execution. There is no room for error priced in.
Risk defined, portfolio protected. That's the mantra we always come back to. This is the definition of high risk.
It is. It's the highest of risks for what could be the highest of rewards.
I want to leave our listeners with a final provocative thought to chew on. We've talked about rockets and money and thermodynamics, but think about this on a more philosophical level for a second. If they pull this off, if they actually build orbital compute, if they create this sentient sun, they aren't just a company anymore.
What are they?
They become the physical infrastructure of human consciousness. The collective brain of the species will literally be orbiting the planet, owned and operated by a single corporation.
And if they fail?
Then it's arguably the biggest and most spectacular financial bubble in human history.
No middle ground on this one.
Thank you so much for this deep dive. It has been a wild ride through a wild proposal.
Always a pleasure. There's a lot to think about.
Thanks for listening to Griffonomics. Keep looking up.